Yeah, well, I call the first year of my investing my schooling in investing. So I used to work for the Shell company, and they introduced a new program where, as part of your remuneration, you could take out a loan equal to your annual salary. We had to sign a piece of paper saying that that loan would be used for investment purposes. It couldn't be used to finance your own or occupy a house, for example. And the tax office gave the company some kind of special tax credit for doing that, and we got access to a low interest loan. So a mate of mine and I, in fact, probably about four or five of us, started to look around about how we might invest that money, and we got into the stock market. We did the sort of normal things. We went and saw a stockbroker. He came back with good advice, saying this is how you patiently invest the money and dollar cost average, and here's some blue chip companies you should invest in. And we said, what kind of returns are we going to get? And he said, oh, 10%. And we went, nah, that's not good enough. We're better than that. We're young guns at Shell, come on. And so we started getting tips from people. We started getting tips from colleagues at work. We hear about potential oil strikes from the guys who worked in exploration, and we buy into these 2 cents a share penny dreadful stocks, and we lose money on them invariably. Occasionally one of our mates would strike it rich and be wearing a new Hugo Boss suit on Monday and all that kind of stuff, and buying a new BMW. So it was a bit like Tax really. One guy would strike it rich, the rest of us would lose our money. But when it was sort of half gone, I thought, this is not the way to do it. Listening to tips, following what other people have been successful investing in, is just going to lose money. So I signed up to every subscription newsletter I could find. I go to the business bookstores and buy books on investing. And eventually one day in an airport, when I was travelling between Sydney and Melbourne, I came across The Making of an American Capitalist by Lowenstein, and read that, and just the light bulb just went on. I thought, this is great. This is what investing should be. It's scientific. The teaching is done by someone who's made it work for them and has lots of experience, and their experience is based on the person they learnt for, being Ben Graham. And it just really clicked. And then so I started to put that kind of value investing into practice. And that was mid-90s, something like that, so 25 years ago. And eventually clawed back the original capital, which was good because it was a loan. I had to pay it back eventually, so it would have come out of my pocket if I couldn't claw that capital back. And then, yeah, went on from there to invest in a much more even-headed, analytical approach, rather than trying to chase the hot thing at the casino.